Hi, everyone, and welcome to our next installment of the Get Moving series. This one we are calling Everything You Need to Know About Insurance. And I am joined here today by Tony Capraro III from State Farm Insurance. How are you, Tony?
I'm doing wonderful for Monday night, Dominic. How about you?
I'm doing great. Thank you again for joining us here today. So today we're going to just kind of go over some basic, overall things about insurance. So I think the best way to start is probably just tell me about insurance and what are the different types of insurance? What do we have out there?
Oh, my favorite topic. Thank you so much, Dominic. I'll go through the myriad of insurances. You've got your auto insurance, you've got your homeowners and renters insurance, you've got your health insurance, which I'm sure you all know about and how that works. You have life insurance, which I consider the most important insurance to keep your family in check. Disability insurance, in case you can't work. We have travel insurance, which is something State Farm doesn't do. And the next biggest thing we have now is pet insurance, believe it or not. That's the fastest growing segment that we have at State Farm, taking care of your dogs, cats, and pets. We have liability, which, of course, in this day and age is so important in case you're sued. A lot of times people say that's never going to happen to me, but it does happen to you. You have no control over it. You want to make sure that's covered. Then what we have, we call a liability umbrella, which gives you additional liability over and above your auto, homeowners, and renters coverage that we see that folks need, especially when you have larger assets or you own a business or something like that. We want to make sure you have that. Then, of course, there's business insurance for folks like me and you, Dominic, that have a business and own a business. And those, in a nutshell, that I just rolled through are the fun world of insurance.
Okay, and in a conversation we were having before, you had kind of said that State Farm invented the whole bundling idea. Can you tell me about bundling and how does that work?
I would love to. So State Farm in its infinite wisdom back in 1922, when George Merhurl was on his farm and said, hey, I shouldn't be paying the same rates. My stuff stays on the farm than the stuff in the street. And the state said of Illinois said, well, let's start your own insurance company. He said, okay, I'll do State Farm. So he was doing auto at first, and he's like, hey, we can do homes too, just as well, or renters insurance, which is just as important in today's age. So he said, let's bundle these two products. At that time, that was all State Farm did was auto, home, and renters. And let's give the folks a discount to do that, an incentive to work with us. And in this day and age, I mean, that's all you see now on commercials or ads is, hey, let's bundle all your stuff together. And again, I also feel for my clients that it's a value added. You have a one-stop shop. You don't have to go to two or three different places or make two or three different calls when all your insurance is bundled in one place. And the incentive for you is a savings of money. It's that simple.
Do you ever see people who don't bundle their insurance? It seems like such a no-brainer to me.
It is funny you say that, sir, because I'm not a psychology major, but when I look at someone and say, hey, Dominic, if you bring over your autos, we have your home right now. I'll save you 30% on that homeowner's coverage and help you with a bundle. Nope, I'm good, Tony. Maybe down the road. Oh, okay. Let me ask one more time because maybe I always blame myself. Maybe I'm not understanding it. You don't want to save 30% on your homeowner's premium. Well, bundling it, nope, I'm good with that. The other time I see it too, unfortunately, in this day and age, what's happening is people are getting canceled for their car insurance for, tickets, driving to endanger, driving under the influence. And then that, of course, won't allow you to bundle. The company won't do it. So that's the other situation I've seen a lot of lately.
Interesting. So yeah, I guess disqualifying yourself for a certain coverage would.
That's correct, especially the auto side, Dominic, that we can't bring over, sir. We'd love to bring over, but we can't. So those are the things that hinder us.
I have a note here about state requirements for insurance. Are there state requirements for insurance in New Hampshire?
Well, that's another. This is live free or die state, as you well know. You have to purchase the vehicle, you have to pay to register the vehicle, but you don't have to have insurance on that vehicle. You can go out and play bumper cars. So that's where we come in and say to our clients, if they're not going to have the right coverage, we're going to make damn sure that you have the correct coverage when that at-fault party hits you and doesn't have insurance. But there are no state requirements for auto.
How about homeowners insurance?
Well, homeowners insurance is another animal because you're going to need that to get any bank loan, to get any type of loan. And the banks check every single year to make sure that coverage is still in place. We have to send out proofs of coverage every year, annual renewals. The other thing I see too, and I had about 2 weeks ago, a gentleman purchasing a home in cash and didn't think he needed homeowners insurance. Well, that's wonderful you purchased it in cash, and congratulations, because that's a big ticket item. Yeah, you must be doing something right. But when that house burns to the ground, and it does happen, I've had 3 total losses in my office in 16 years, you're going to want that insurance to rebuild.
Mhm. Okay, and then let's see. So what about how often should you reevaluate your policy?
Great question. With all of our clients or any client, I would think at least minimally annually when you get the renewal, you get that nice package in the mail and it's in bold and it says, please review your coverages. This is your responsibility. Make sure they're correct, and they don't, they throw it in a drawer or whatever happens. We want to make sure you're doing that at least annually. But more importantly, you want to be doing that every time there's a life change. So I don't care whether it's a marriage, a divorce, you're having kids, you're starting a business. The other thing we look at too is buying a home, right up your alley, Dominic. You're buying a home, we got to be looking at where you should be for insurance and are you properly protected. The other thing that most people don't think about is a change in assets and liabilities. So you start to gather assets and liabilities and you get sued, they're going to come after that. The 40 years you've worked, served with for your 401k and IRA to grow, somebody could come and take that overnight. So you want to make sure that that insurance is in place and that you're properly protected as you move forward.
Let's see. How one of the questions that we've gotten in the past is
Sure.
how does credit a score affect your insurance? So I don't need to know the ins and outs of credit scores and all that kind of stuff. We have a whole nother webinar for that one. But
I saw that webinar, and I'm glad they can explain it because I can't explain it, sir. All I know is the better your credit score, the less you're going to pay for insurance. That happened in the state of New Hampshire about 10 years ago when we were told in a bulletin that, hey, credit score may become part of your premium. So they've got all of these factors now, your credit score, what's your history as far as claims, what's your history as far as driving record, that type of thing. So I like to counsel young couples and say, make sure you're watching that credit score and paying your bills, because down the road, that will pay you back tenfold. Long and short, credit score will affect your premium, good or bad.
Credit score is one of those things that there is no downside to having a good credit score.
Amen
So
to that.
whatever you can do to increase that score is going to be the best thing you can do for yourself. So
Absolutely. Amen to that, sir.
And then as far as I have another question here, which is, what is the difference between renters and homeowners insurance?
Another great question. Most of our clients, of course, start out in the renters and then they go into the homeowners. The homeowners insurance will cover the structure itself and everything inside. With renters, you're just basically covering the contents inside. We like to say if you turn it upside down and everything that falls out, that's what you want to cover in a renters, plus liability. Because what people don't realize is that people do sue. So the UPS guy, and I've had this situation, that falls down your stairs is going to be looking, if he's not covered, to get health insurance, and you're at fault. So even with the renters, we want to make sure we have the proper liability for that renter. So if they do get sued, they're covered.
And how do you know, like, is there different levels of renters insurance like there is with homeowners, or no?
Without a doubt. So when we sit with a client, the minimum renter's coverage for your contents, all of your belongings, is 20,000. And people go, oh, that's way too much. And then once we start adding up stuff, it's not way too much. The other part you look at too is their liability. So they'll say, I want 100,000 of liability, that should cover me. And we look and say, that's wonderful. But looking at what you're earning and what your potential earnings are down the road. And again, I hate to keep going back to getting sued, but if you watch TV, all you see is the lawyers' ads about, slip and fall, what happened, let's get you money from those bad insurance companies. You have to look at that and say, okay, what do I have for liability? So going from $100,000 of liability to $300,000, tripling your coverage, is about $1 a month additional. So when people are educated, and sometimes I hate to use that word because they feel like you're talking down to them, which you're not. I like to say educate and elevate. So you educate them and they go, why wouldn't I do that? And then when they do have a claim, because what they'll say is, I have never had a claim. And I say, well, now, Dominic, you're due. because claims are going to come statistically, and our actuaries figure out all that stuff. They're in an office somewhere in Bloomington in a cubicle, with a tent, and they figure out all this stuff and when people are going to have claims and when they're not. And by God, I try to say, and they're right most of the time. So the huge difference is when you go to that homeowners coverage, of course, you're covering the structure. And we talk about total loss, and clients will look at me and say, what are the odds of a total loss? And I say, about 1 in 1,200. Do you want to be that one? You don't want to be that one. And
Somebody has to be the one.
I can tell you that's not the time you want to be the one. It's not the lottery. I've had situation in my office, including very personally, one of my own team members whose house burnt to the ground in June. So a quick story. He was with another company. He was new to me, so we hadn't transferred everything over yet to State Farm. We had done the cars. We didn't do the auto yet. So he's dealing with another insurance company. And again, the other insurance company that he dealt with, they hadn't updated that policy in 10 years. So I can let you in the audience just guess at what he's going through now to try to, create the coverages and try to create all the things that he needs to get back for contents, because that's been a nightmare. So know what you have. And I promise you, when claim time comes and you fly through it, you're going to be an extremely happy person, even with a claim.
Well, speaking of claims, what happens when you want to file a claim? Like, can you walk us through the process? So let's say something terrible happens.
Sure.
I have a tree fall on my car or something like that.
Yep.
How do I go about it?
Dominic, it happens all the time, all the time. So what we like to do with our clients to help mitigate claims that are going to happen, we'll say to them, look, video all the contents in your home, video all your toys, your cars, your motorcycles, those types of things. Because when claim time does come, and it will come, you can show that video, believe it or not, and claims, it just helps the experience be that much better. But what we do is we'll say, get to us first, get to your agent, get to your insurance company first. So don't put in a claim. Let's talk about what exactly happened. Oh, the tree, good. Here's what I want you to do. I want you to get 3 quotes from tree companies. We always get 3 because the quotes can be wildly different, okay? So get 3 quotes and then give us a call back, because then we're going to talk about your deductibles, which most people say, I don't even know what my deductible is. So we'll look at deductibles. We'll look at how much that claim is going to cost to take care of. And then we're going to let you decide. We're going to give you all the pros and cons. We don't tell you one way or the other to put in a claim or not put in a claim. And then you can make that decision. Then that goes to our claims department, or any insurance company's claims department, and they handle it from there, because they are a separate entity and they have to have a claims adjuster's license. So we're out of that. We have no pull one way or the other, and it's a good thing because we can't influence one way or the other if the claim's going to be paid. And then what we like to do, and what we've done, in fact, is I want a follow-up call from my claims adjuster who handles that claim to exactly what happened. Then I follow up with the client and say, hey, everything great? And they're like, TC, everything's wonderful. Boy, that was easy. And that's what we want to hear, because I don't care how much money you save on premiums and you think I'm saving all this money because I have low coverages and I've got high deductibles. When that claim time comes and you're not covered, it doesn't matter how much money you saved in the past.
That's excellent. Excellent advice. So as far as deductibles, you mentioned deductibles. Is there any way you can reduce those deductibles or I guess not necessarily reduce them, because that's not perfect for everyone. What are we looking for when we talk about deductibles?
Another great point, Dominic, that people don't really look at, and that's the first thing we'll look at when we're doing a review from another company. The deductibles is your out-of-pocket expense. What are you comfortable coming out of your pocket before the mighty State Farm or Allstate or any insurance company gets involved? And everybody's different. So when people come in and we see that they have the same deductible on their homeowners that they have on their car, and I know they haven't reviewed that coverage, why do you have a $500 deductible on your home? So what we will look at them and say is, look, the home claim is going for astronomical claims, catastrophic claims. It's not, like your car, you got to fix the bumper, you got to fix the headlights, you got T-bone and we'll fix the car. Your home is going to be like last week. My clients went on a boat cruise. They came home, the second floor toilet overflowed for the entire week, right into the first floor. Okay.
Oh, wow.
I mean, it is an absolute disaster. So what we want to say to them is, hey, what we did was your deductibles back then, we did a 1%. So going from a $500 or $1,000 deductible, which was the Fred Flintstone days, that's all we did back then for homeowners, because you were putting them in like a cash register and get it. That's not the case anymore. In fact, I don't mean to get off on a tangent. I often do, I apologize. But a lot of homeowners companies are going to stop writing homeowners. With the claims that are coming in and the fact that some of these companies aren't as large to be able to pay out those claims, you're not going to see them stop writing homeowners. So the deductibles can become very important. My client comes in today, he's got a $500 deductible on his home. We look at it, we make it a 1% deductible. Tony, what does that mean? It's a 1% deductible on the estimated replacement cost of your structure, your entire home. So if it's a $400,000 home and we've got it insured for that, you're going to come up with the first 1% or $4,000, then State Farm is going to come in and pay the rest. And that saves you hundreds on the premium each year, but you're still properly insured. And that's what we like to look at for our clients.
And so you're saying it's 1% of the actual like replacement cost of the house, which isn't necessarily the purchase price of the house, right?
No, and that's Dominic, thank you. Okay. And that's why I like dealing with realtors like you, sir. Because we'll get a call from the bank and say, yeah, we want the home insured for 600,000. I'm like, well, the structure is for, well, the land, we don't insure the land. We're only insuring the structure. And I can assure you, sir, I have taught a lot, and I don't mean to sound arrogant about it, but I've taught a lot of banks that I know it's in your rule book and I get it, but that's not what it's going to be. It's going to be replacing the asset. And that's what we're going to insure it for, because that saves the client money too. We're not insuring that $600,000 mortgage, which is the cost of the home, or they're looking to sell it. We're looking at estimated replacement cost. We use software and formulas from builders around the country. In fact, I just was told over the last 3 years, the cost for builders has increased 32% for materials, labor, and that's being passed on. So when you don't want to review your homeowner's coverage to make sure it's where it should be, that's when you get that surprise. And again, deductibles play a huge part in saving money, but also making sure you've got the proper deductibles to be covered when you have a claim.
Well, yeah, and here in New England too, we have so many antique homes that were built in the 1800s. You just could not build them the same way today without spending astronomical amounts of money. So
that's a great point. Specific situation over in one of my adjoining towns from Manchester, and this woman was with another company. She came in, we looked at it, we're like, well, you haven't. We literally doubled the coverage on her home, and ironically, 2 weeks later, she had a fire. And thankfully, she was properly covered. Now, we ate that claim, which is wonderful for her. But had she not come to us or taken the time, like the folks on this webinar tonight, or the folks that'll be watching this video, to take 30 minutes with someone like me to just review coverages and make sure you are where you should be, she can't thank us enough, because she would have been unjustly underinsured with that fire. And instead, she was made whole.
That's great. So deductibles, that's a great way to kind of start a conversation with an insurance adjuster. Or
absolutely. Yep.
Okay. What questions would you like to ask your clients? Like when you first meet with somebody, what are the questions that you ask them?
That's a great point, because we like to do the reviews now, and I've actually got a third party that's calling out to do reviews for our clients. But if it's a new client to us, which I love, first thing I ask them is, how did you arrive at these coverages and how long have you had them for? And I get the blank stare, because people don't understand insurance, and there's nothing wrong with that. I wouldn't know how to hang drywall. I wouldn't know how to paint a house. And those are my clients. So they'll look at me and go, oh, I didn't want to ask a stupid question. There is no stupid question. We were there to make sure that you're covered, insured properly in case of a claim. The other thing we ask, how have your claim situation been the last couple of years? Because again, claims frequency is the new word in the insurance world, and that's how you can get canceled. So the more claims you're putting in on a regular basis, Dominic, that's what insurance companies are looking at this point. The second question I ask, I'll let you
go off on a little tangent there before we get too sidetracked.
Go ahead.
That was a good thing that you brought up.
Yeah.
As far as getting canceled, is there like a magic number within an X amount of time? Like if you have 5 claims within 5 months, are you like, you're out of there kind of thing? Or is it something that's case by case?
It's so funny you mentioned that, because in the good old days, when I started in the business 36 years ago as a young man, I've seen so many changes. In the old days, it was somebody looking at that claim, Dominic, at a desk going, hey, Dominic's a great guy. Yeah, he's had a bad string of luck. We'll keep him. Now, sir, most of it is electronic with every company. So
Oh,
when they get the claim, there's not even really hands touching it. Do I reach out to claims and say, hey, what are you thinking of this one? And they say, TC, we can't really discuss it with you, but this, in the good old days, it was humans looking at it. Now it's strictly most of the time, unless it's, an adverse loss, like a total loss or a
right.
fire, because they'll investigate those for arson. But now it's just a frequency thing. And again, I can assure you, I have clients that have had 4 claims in a year or are still on our books. And unfortunately, I have clients that have had 2 claims in the last year and they're canceled.
Is there any recourse for something like that, or is
There is. I do what's called a review.
okay?
Um, and I submit that. And again, I don't know how the companies do it. And then the hands-on person will look at that and say, Capraro's trying to help someone, or Capraro, this client's been there forever. Let's make an exception in this case. But a lot of times, not anymore. That's a great point. With claims and frequency. That's all we hear now. Frequency, the client frequency. And as I think I mentioned just prior, a lot of the homeowners companies, when you've got billions of dollars of claims in the Midwest, you've got fires in California, you got the Hawaiian fires. State Farm paid out last year $9.2 billion in claims.
Wow.
They handle 29,000 claims. We handle 29,000 claims a day across the country. So at some point, those smaller companies that you might be saving premium on right now for your homeowners won't be here. And that isn't a scare tactic. That is exactly what's happening in the industry. The new thing too now, Dominic, as you may know, sir, are drones. So we can send drones out now, or any insurance company, to take a look at your property. And in years past, as long as you paid premiums, the insurance company's like, we haven't paid out a lot of claims. We haven't had a lot of claims. We'll just roll with it. But now that the claims are becoming so substantial, we're going to send a drone out to make sure Mr. Capraro's building is in good shape, that Mr. Capraro's roof is in good shape. And if
Do they
it's
have
not,
do they have to inform you that they're doing that, or is that something they can just do?
they can just do. And again, I don't know the legalities. I'm not an attorney, God knows. But that is something they're all doing now on renewal, is sending those drones out. And
Wow.
here's the other piece of that, Dominic. In the past, we've had a third party go out and knock on doors and people get riled up and they're like, oh, you're just trying to, and no, we just want to make sure that your home is in good shape so that when you do have a claim, it's covered. But now with the drones, they push a button, as you know, I don't know anything about it, but they push a button and it's looking over your house, looking at you and your pool. I don't know what's going to happen, privacy wise or legality wise, but that's what all companies are doing now.
Yeah, I had a friend who bought a house earlier this year who
Yeah.
had his insurance company come out and basically look at his roof and said, unless you replace that roof, you're going to get dropped.
Yep.
And he was in a situation where he literally just spent everything to buy the house. So he's like, I
Understood.
wasn't budgeting for this anytime soon. And it
Right.
was on the garage, not even on the house itself. It was a detached garage kind of thing.
Sure.
So like he was very worried. And I told him, shop around, another insurance company may not say the same thing. Don't get scared. Like,
That's without a doubt, my friend, and the competition is fierce.
yeah.
I remember starting 36 years ago, if you get back to a client in 3 or 4 days, you were a hero. You don't get back to them now in 3 or 4 hours, Dominic, they're with someone else. I answered 2 emails, sir, last night, one at 9:30 and one at 10:15, to
Hmm.
make sure I keep these clients. And that isn't to brag, that's to just show context how fierce it is. And like you said, try another insurance company. They might say, like we have in the past, look, we'll give you 5 years to replace that roof. If you don't do it in 5 years and have a contractor, and again, that's changing now too. I have to be right up front. Now it's like, it's got to be changed or we're not going to insure it. So,
Interesting.
yeah.
Okay, so getting back to what we were talking about, we were talking about questions that you ask clients when you first talk with them. So you had originally said the first thing you ask them is, how do they get the coverage that they have?
Thank you for that, sir. Thank you for
Yes.
bringing me full circle. You always have to do that, sir. So I will always ask them, how'd you arrive at this coverages? Why do you have these coverages? When was the last time your insurance company or person did a review, estimated replacement cost on your home, your biggest investment you'll ever have, the place you love, the place your family is? And they look at me and go, it's been years. Well, that's the first thing we need to do. Then we need to talk about your goals and objectives. Hey, where's your autos? Because we want to bundle. State Farm loves bundling. They invented bundling. So let's bundle everything together. Why is that good for you, Mr. Client? Because you're going to save a boatload of money. and we're going to make sure that everything is here. Another value added for you, Mr. Client, is that we're a one-stop shop. You come one place, you talk to me or my team members, and you know everything that's covered. Then I ask, what are your concerns? Dominic, what are you concerned with if something happens to the home? What are you concerned with if, you know, your car gets damaged or stolen? What are those type of things? Then we ask assets, and they say, why are you asking me about my assets? And I say, look, I like to know everything about you. So I need to make sure that if you're going to be in a situation where it's litigious and you're being sued, that we've got the proper liability coverage. So I could put 100,000 of liability on your home, sir, but if you have assets worth 500,000, they're not going to just come after your liability on your State Farm homeowners.
Right.
They're going to come after your assets. So that, and then once they learn that, they go, oh, they take a deep breath and go, oh, I have this, this, and this, and realize we're just trying to make sure they're properly insured. The other thing we like to look at too is liability umbrellas for our clients, because we got a lot of people with assets. We've got a lot of business owners. Tony, what's a liability umbrella? That is a liability coverage over and above 1 million. We sell them in $1 million stipends, believe it or not. I mean, that's what we do. $1 million over your auto and your homeowners coverage. And in my 16 years at State Farm on Kelly Street, we've had three. We're working on the fourth. Situation where a client is being sued, and that money is going to come from their liability umbrella because there's medical issues that they caused to the other party in the car. And they thank you up and down. What people have to realize now is that that person asking all these questions isn't asking it because he's going to put it on TMZ, because I'm not going to put it on Facebook. I'm putting it in my notes to make sure that when you have a claim, Dominic, you're not calling me on my team and saying, Jesus, guys, I saved a ton of money, but my claim isn't covered. I'm now being sued for 300,000. And I got two clients, two of them, whose paychecks are being garnished because of accidents in the past and they didn't have the coverage. So those are the things we want to look at. And what I like to do with a first-time client is literally that first time is make them just take a deep breath when they come in, because they come in walking like they're coming into the Last Supper to meet with me. So I have people, think I'd rather go to a dentist and have a root canal without Novocaine than go see Tony Capraro at State Farm. But those are the things that, I kid you not, when they're walking out and they're hugging you, or they're walking out and saying, oh my God, I'm so glad. We don't want this 15-minute crap to save you 15%. I want an hour of your time to learn about you and your family and what you consider important and what you love and what you want to protect. And then I'll give you options. My grandfather always said to me, Tony Capraro Sr., Anthony, options are a wonderful thing. We're not giving you just one thing and you have to walk away. Here's options. You choose. And that's how we get most of our clients. They're upset with their prior company, and that's how we get them.
Yeah, and I think really what it comes down to is that you're selling peace of mind. So you're selling the idea that if something tragic were to happen, that they're going to be in a situation that's not going to ruin them financially or change things permanently for them. So
Exactly.
yeah.
And they'll always say to you, Dominic, that's not going to happen. Or this past weekend, 3 motorcyclists killed.
Yeah.
Okay. Kids, I watched on the news last night. 7 kids under 21 killed in car accidents. I'm not the angel of death with the sickle. I'm the guy who's going to make sure that if that tragic event happens, listen, people lose people every day that they love. Imagine trying to make those decisions financially where you don't have the wherewithal or the proper protection, and you're trying to make those decisions while everything is in flux. I can assure you, when you have and know that everything is in place and you got to make that decision, it's so much easier on your conscience, your soul, and your heart.
Yeah, that's very well put. Okay, so that's what you ask a client when you first meet them.
Yes.
So what do clients ask you when they first meet you?
It's funny because I know what I want them to ask me, but basically they'll come in and say, if you can beat this coverage, I'm going with you. I see you all over Facebook. I see you supporting the community. I see you everywhere. But I have to look at them, Dominic, in the eyes and say, Mr. and Mrs. Client, I'm not trying to beat this. Yes, my secondary goal will be to help you save money. I assure you of that. My first goal is to make sure you're properly protected. And I know I repeat that over and over again, but you would be amazed at the number of people that when we're doing that first interview with a client, that they have no idea what their coverages are, haven't reviewed them, those type of things. I mean, I've literally had people say to me, Tone, I wanted to come in and see you today, but I had to go get crepes at Chez Vachon. So I went down and I got crepes at Chez Vachon. Can we meet some other time? Or they're telling me that they're going to visit, friends in like different parts of Europe. And when I get back, I'll review all this with you. Why don't we do that before you go? So what I want them to ask me is, what should I have for coverages, Tony? What should I be looking for when I have a claim? What are you going to do for me when I have a claim, Tony? Tony, what are you going to do when I email you Sunday night at 9:15? Because I'm concerned about my daughter. And I'm going to say, I'm going to respond to you at 9:16 like I did this Sunday. So those are the things that people are trying to get back to. Again, Dominic, I'm a dinosaur. I've been doing this for 36 years. That isn't to impress anybody. It's to let you know the context that I've seen it all. I've heard it all. I don't listen anymore to what people say. I just watch their actions. And I will help you. I will bend over backwards. I will give you the shirt off my back to help you make the right decisions and choose the right options for insurance. And that's it. And when they walk out that door, my team will tell you, or they come back and they baked you an apple pie, or I'm on the west side. So what is it? It's like a meat pie. I forget what they call it. What is it, Dominic? The meat pie that
Oh, I'm
French.
not from this area, so I don't
Oh,
know.
okay. Sorry, buddy. I can't think of it. I'm Italian and Irish. I don't apologize for that. But I'm on the west side, the French side. Can't they bring it? They bring you an apple pie and they say, Tony, team, thank you. But it's really what you need to be doing at this point because they don't understand it, and I want to help them. And you just doing this webinar. I mean, you didn't have to do this webinar. I was thrilled that you offered this to me and you're adding value to your clients with the insurance piece. I mean, it makes a difference when things happen, and they do happen.
Yeah, it's another thing that people ask about, so we figured it's a good topic to cover. So
Love it.
happy to have
Love
you.
it.
Let me just see if we have any questions from the crowd. We'll
Sure.
just take some time for that. In the meantime, though, while we're looking for questions, you mentioned pet insurance is a new up and coming one that people are looking into. Can you tell us a little bit about that? I'm just curious.
Oh, great. Thank you, Dominic, for that. I forgot. We partnered through Trupanion. State Farm and its infinite wisdom up until 10 years ago said, look, we're the big boy on the block. We don't need to partner with anybody. We'll just do insurance and everybody will be happy. Well, in the last 10 years, they realized that if we can help people with other things, we had an affiliation with Rocket Mortgage for 2.5 years. I loved Rocket Mortgage. I did a lot of business with Rocket Mortgage and it helped my clients. Unfortunately, Rocket Mortgage had 6 months ago and said, we don't really want that. We just want brokers now. But anyway, so State Farm says, who do we align with that can help and add value to our clients? So we now deal with Humana for Medicare Advantage. I help a lot of clients who are 65 and go, Tony, my mailbox fell over because I have all those cards and brochures. Can you help me with Medicare? Tony, you do? Yeah, I do that. I can help you with that. So we partner with Humana. Then we said, what do people really love? Sometimes they love their kids, right, Dominic? They really love their grandkids, buddy. They love their grandkids. Sometimes they love their kids, but they love their pets. So State Farm said, let's go with the number one provider of pet insurance, Trupanion. And my clients love it. So my client who 2 weeks ago goes to the vet, which would normally be a $900 visit, was a $50 copay.
Wow.
Yeah, so I love it. And again, we're adding to that household and adding value to that household. But again, you'd be amazed at how inexpensive the coverage is through Trupanion for your pet. And those, emergencies or those regular office visits, instead of being hundreds, of $50 as a copay.
So one of the questions that we got is, if you are a renter, do you need insurance if your landlord has insurance as well?
I love that question. Whoever got that gets a $10 Amazon gift card. Send me the address and the email. Everybody says they don't. Of course you do. You're liable. So someone's in your apartment. You're watching, I don't know what you're watching. I mean, I watched Little League World Series yesterday. I mean, I threw everything off my bed. It was an unbelievable game. Maybe if I had people downstairs, it would have went through the floor and hurt someone. It didn't because I own a home. But you're liable. Yes, your landlord will have coverage for the home itself. He does not have coverage for your contents. He does not have coverage for your liability. So now, Dominic, more and more, if you go to these rental companies, and I know, and it's wonderful for us, that landlord is requesting rental insurance before they even contract with you to get that apartment. So yes, long and short, and I apologize, sometimes I go overboard. You do need, as a renter, and Dominic, when we tell you how expensive renter's insurance is, $8 a month.
Wow, that's it.
That's it, sir. And of course, the more you include coverage, the more you include liability. I mean, I did a huge one Friday for $12 a month. So I went out and celebrated at Ollie's. No, I'm being facetious and I'm doing it for a reason. Folks, renter's insurance, peace of mind, liability. Someone comes in and steals. I had all this stuff stolen on one of the apartments on the west side, made whole. Here's all your drum kits back. Here's all your TVs. You're all set for $8 a month. So yes, you need renter's insurance, even if your landlord has homeowners.
And then the other question that we got was, what are some common things that could make your insurance company drop you?
Another valid point. So again, what we're seeing, and I think I went passionately at it, frequency is going to be one of those things.
Okay.
With a car, it doesn't matter. But with a car, what does matter is driving to endanger, DUI, those type of things. Again, in the past, currently, they'll give you that exception, but they'll raise your rate the next year. I mean, substantially, right? On the homeowner side, what you're looking at is frequency. The home, again, we talked about the drones, the home not being upkept. And I'm looking here because I had a bunch of things and now I can't find them. But it was basically, are you taking care of that structure? How does it look? How's your fence? Front stairs, you pull up and this railing is on the side of the house. They're looking at me going, do I have to replace that? And I'm like, yeah, you got to replace that. So that's what'll cause you to be dropped. Again, non-payment, fraud, what we're seeing a lot of, Dominic, now, or still, I shouldn't say now, is folks saying they live in New Hampshire, but they live in Massachusetts, because Massachusetts rates are quadruple what our auto rates are. So they'll try that, but now the companies have figured out a way to make sure that if it is, and it's fraud, and they cancel you right away. I'm trying to think of what else. High risk behavior. We've got, again, driving to endanger, driving suspended, those type of things will absolutely get you canceled. The homeowners, like I said, frequency is the only thing I've seen, and not upkeeping the home on renewal when now they're checking every year on renewal where they didn't in the past.
Yeah, and I could see that being an issue too, because as a homeowner, if I had something that was in that kind of gray area where it costs a little bit to replace or to make a claim on, but then I'm like, oh, I've already made a claim this year. Do I try to call it in? Do I I don't want to get dropped by my insurance. So I guess it's like that's a situation where I would probably reach out to my agent and say, hey, this is the situation. What do you think? Should I try to file a claim for this,
And
or
that,
should I?
Dominic, that couldn't be better sage advice, sir. That's why I said when we talked about claims, get to us. We're going to go the pros and cons, and then you're going to make that decision.
Right.
And again, what I feel and what the industry feels is there'll be less and less competition on the homeowner side. A lot of these companies that advertise now about your car and we can do home at some point won't be selling homeowners. Again, not a scare tactic, just a fact that I think is going to become a reality. You got to find a financially strong company that when those claims come in, 29,000 claims a day, $10 billion almost in claims, that company, State Farm, can just pay out without an issue. That's where I want to be.
Yeah. Well, I think that brings us basically to the end. It doesn't look like we have any more questions. So I
Wonderful.
just want to thank everybody for attending. And I want to thank you, Tony, for taking the time to speak with us today.
My pleasure.
If anybody has any questions for you, how can they get in touch with you?
Thank you for that, Dominic. The old fashioned way, 603-623-3537. We love you to walk into 510 Kelly Street in Manchester. We have horrible coffee, but people seem to like it. And we do free giveaways. So come on in, or the savvy way now, and all the technological people, www.trusttc3, the numeral.com. Be happy to help anybody.
Perfect. And if anybody has any real estate questions, I would be happy to help you. You can reach me at Dominic@porcupinerealestate.com. That'll be in the notes on this, the rebroadcast of this, the video of this, I should say. So thank you, everybody, and we'll see you in the next one of our Get Moving series. Thanks again, Tony.
Good night, folks. My pleasure. Glad to help.